Hello and welcome to Guides.Global. My name's John Howell and I'm the editor, and with me today I have Phillip Crane. Phillip is an internet entrepreneur who has a long history of investing in real estate, and that's what he's about to talk to us about. So Phillip, welcome.
Thank you.
And thank you for coming.
Sure.
You have had a very interesting career, I think. You set up your own internet company right at the beginning of the internet era.
Pretty much, yeah. I was one of those ones who decided to take a hobby and turn it into a business, and the only way to really do that at the time was through the internet. And it was one of those things where it was unique. It was, at the time people were looking for what I had to sell, and it took off. So it inspired me.
This was a company called Pure Modern, and you were selling furniture.
Actually, no. This is way before. So I was one of the first sellers of live plants online.
Oh.
Yes, this is way early on. So, which evolved eventually into furniture and home goods, garden, and all that stuff.
Decor.
Yeah. So So then it evolved into the most successful one so far, which was Pure Modern.
And you obviously did this well because you sold it for a humongous amount of money.
Well, it's relative.
And not content with that, you've now decided that you're going to do another internet company, and for this purpose you're moving to the Netherlands.
Correct.
Yes.
And it's going to be very similar in nature. So.
But in the meantime, you've always had an interest in property investment.
Correct.
So just tell me what drew you to property investment as a way to make money.
Well, I was originally a bit of a skeptic because my first couple purchases really didn't yield a whole lot. It was one of those things, very emotional purchase.
And when would that have been?
First one was 2000, I would say. Second one, 2003 or 4. And broke even on everything, but it was never an avenue for me to go like, oh my gosh, this is a great way to make money. But during the white hot market of Texas real estate in about 2005 or 6, I met developers and investors and started purchasing condos there as they were rapidly increasing in value. And it was interesting because it's almost like they say how the dogs get the taste of blood. It was you sell one, you make some money, and then it's like, let's do it again. So.
And the unkind would say that any idiot could make money in Texas real estate in 2005, 2006. The trick was keeping your shirt
right.
in 2008 to 2009.
Right.
But so, you've continued with real estate all through this period, haven't you?
Right. So that was actually right when the real estate market tanked there. It was the first time I elected to become a renter because I knew that there was just no way you could enter the market and get out alive. So. Fortunately, I was able to exit with my money and dignity intact. So, chose to rent for a couple of years and decided to get back into it. It was one of the most. It's a common sense thing when you see the markets that are devalued by 50%. You should actually get back in.
And you at that time moved from Texas to Miami.
Correct. I was in Miami at the time.
Yes.
when I saw that. So.
And so tell us about the property you bought in Miami, and how did you choose it, why did you choose it, and how did it make money?
Well, sure. So the process was simple. We wanted obviously great value. We were looking at a mix of older foreclosure type properties, short sales, and then really, anybody who's looked at foreclosures know that it's not an easy path. I mean, dealing with the banks and especially short sales. So we kind of gravitated towards developer units, which at the peak of the market in 2009, or peak of the downturn.
Peak of the market.
Yeah,
peak
not
of
the
the depth of the
market.
market.
The wrong side of the market.
Yeah.
There were, I believe, at the time, 35,000 unsold developer units in the greater Miami area. Right? It was more, obviously, the larger the area was you're talking about. But in downtown Miami-Dade and Miami Beach, I think it was 35,000.
Yes.
And the developers themselves had gone through cycles of trying to rent them out, and then finally they were getting the properties foreclosed on, and they were doing anything they could to dump them at the time. So there was an attraction to the fact that you can get a new property basically unlived in unless they rented to a tenant, 50 cents on the dollar.
Yes. Or less.
Or less, I would say. My first property there was probably 30 cents on the dollar actually. So. And then, just looking for the thing is location obviously is the best thing. And then
where were these properties located?
This was downtown Miami, right on the bay.
Yes.
So
prime.
It was
location.
prime location, and it was one that still, there was still enough urban grit that scared people away that wanted ultra luxury. However, the developers were building ultra luxury, so it was sort of a convergence of the market dying and the fact they were still sort of trailblazers in the downtown Miami area. So you had, I think our building would cost $400 million to build, I believe.
It's a big building.
It was 54 stories, yeah.
Yes. So lots of apartments.
It was a ton. It was 590, I believe.
And how many of them had they sold at the time when you decided?
I believe the developer had only sold about 20%.
Yes.
And so
this is a disaster from the developer.
Oh, sure. And they were a related group, so they were already in the hole on a number of projects at the time. So this one was sort of the one that had been out of the ground first and longest, and so they were really in a panic at that point because, and during the process, we were looking at the properties. They were actually actively being foreclosed on yes. portions of theirs.
So what made you decide to buy into this particular development?
It was the newness of it. It was the fact that the architecture of the units was easy to work with because one of my ideas was that if everything was built so builder grade, everything was, if you went from building to building, especially built by the same developer, you wouldn't know which building you were in. So the architecture of the building itself and the amenities that it offered and the location, but it also lended itself to the most ability to customize.
Yeah, so your background in home decor, that was
exactly.
a no-brainer.
Amenities are made a lot easier. Yeah. So, and the thought behind that was, first of all, you can customize it for your own use, sure. And then anything that set it aside or set it apart from the other units, since they were all so identical, if you could actually get a good design in there, the minute you go sell it, you're the first one to get across the finish line trying to sell something.
What was it worried you about buying into a project which is only 20% sold?
The high ratio of renters. So, and the fact that this happened so fast, the bubble burst so fast, and they were left literally scrambling to find somebody to rent these things. They were filling these buildings with warm bodies without, doing credit checks, criminal checks, things like that. So you could end up in a building that was brand new, couple $100 million building with units that were selling in the millions, prior to the bust, then with tenants in them that didn't care. They were renting it. I remember there was somebody who was renting on the top floor that we became friends with, but it was I think it was a 3-bedroom, 2,800 square foot unit. They were renting for $1,500 a month,
right?
Which is insane.
Yes. Yes.
So that scared me.
Cut a long story short, did it work?
It did. Yeah. The best thing was I had it for about a year. The market was still depressed, and put it on the market, and it was funny because the realtor was like, "You're asking too much for it because there's just no comps." But immediately it was understood that since everything else looked so similar and nobody had done any upgrading to them, the uniqueness sold it immediately because people liked the building, yes. But they had to find something that was not just bland and off the builder shelf.
And how long did it take you to sell?
2 days.
2 days.
Yes, which was
this is at the depth of the market.
Yeah.
Yes,
2 days.
And so, in your view, your idea that making the property unique, upgrading it, mm-hmm. making it more luxurious, more beautiful than any other property, it works.
That was it. Yeah.
And you made a little bit of money out of it.
Made a little bit of money out of it, but the best thing is it costs nothing to live in, during the time. But it also kind of prepared for doing future renovations, and gets you in the mindset of what people are looking for or not, because you can do it for yourself, but you never know really what a third-party buyer is going to be. And ironically, and I don't know if you know this part of the story, but it was actually a French investor who came in, who bought it, where they were just now starting to sniff around, because as the market hit the bottom, of course everybody was panicked, but you just now at the onset of foreign money again coming back in.
Yes, people with money recognising there were bargains to be had, which is incidentally always the same somewhere in the world.
Absolutely. Yeah.
Now the reason you were selling is that you were upping sticks and moving to Hawaii.
That is true, yes. It was a coin toss on where to go next, and part of it was motivated by the price of real estate as well. Hawaii being known for one of the most expensive places in America to live, they are a market of, at the time, and I'm sure it's much the same now, but they're third, fourth, fifth homeowners. So as the market was failing, those were the types of people, investors or multiple homeowners, that decided they were going to walk on property. So So the ratio of foreclosures just kind of skyrocketed there, and it wasn't really a market you heard of like you did Nevada, Las Vegas or Miami or things like that, but it was in just as dire a shape. So
now I think we'd better just make sure our viewers are sitting down at this point because you have bought a property in Hawaii on the water. How big?
It was about 780 square feet, I think.
And tell us what you paid for it.
$22,000.
$22,000 for a beachfront property in Hawaii.
Absolutely, yeah.
Yes. So you weren't going to lose any money on that, were you?
Well, really, I didn't care. You couldn't rent anything for that.
Precisely.
And even if it was a complete disaster and had to be renovated, which was fine, the intent was to renovate anyway because that's what I wanted to do.
Because this was a building 20, 30 years
It was built in the 70s.
Yeah.
So, and knowing that I was going to renovate regardless, it didn't really matter. So, so we took the approach that you really can't lose. The fees were high on it. They were, a bit exorbitant really for what it was. But at the same time, your buy-in is so low, you almost cannot lose. I mean, you can always over-renovate for sure. I mean, that's no...
But that was your plan then. You renovated it initially for your own use. And did you follow the same policy? Luxury, different, modern, clean?
I absolutely did, except for the fact it was harder to execute because you couldn't find contractors or suppliers or anything that understood that there was a desire for the modern look in Hawaii. But we managed to really put it together, find just enough suppliers to get that done. And again, it turned out to be certainly the most unique property. There again, it was a property of about 115 units, and they were all built very similar. And the taste of the Hawaii property buyer has always been the wicker furniture, very Hawaiiana. And so we decided to go in and say that we're not going to do that. We're going to do the dark wood floors and the dark cabinets, white countertops, things like that just weren't there. So finding the materials was first the difficult part, and executing was a whole other story. But all in, at the end of the day, everybody who saw it was like, this is the thing that is the gem now of this.
So you lived there for a couple of years, and then you decided you were going to buy another property in Hawaii. But you decided not to sell this one, but to rent it out.
To rent it out, right.
And if it isn't a rude question, how much were you getting in rental income for it?
Not a rude question. It was about $2,500 a month.
$2,500 a month. So in 1 year, you're making $30,000, and this property has cost you $22,000 plus what you.
Sure. I mean, your net is less obviously because your fees, but it was certainly paying enough to make the thought process of maybe rental property isn't so bad. However, I'm personally not real keen on renting to people I don't know, so it was a function of finding people I were familiar with to rent to, but and then it was a function of also saying, well, what else can we do with the property? Do we want to keep it if we're so far away, or if we choose not to stay in Hawaii? It's very difficult to manage. And so it was, well, why don't we try to owner finance it, and we went that direction.
And in the end you sold it.
Yeah, and we carried the note.
Are you going to embarrass me by telling me how much you sold it for?
I think I don't remember the exact, because it was a little bit, it was in the mid 100s.
Yeah. So you buy at 22, live there for free, sell it for in the mid 100s.
Yeah.
Not bad for a couple of years.
Not bad at all. Yeah.
No. So you've now bought another property in Hawaii, and that was a slightly more modern property, but you also decided you were going to renovate that.
Yes, it was more of a challenge property. It was one of the original beachfront concrete properties. It was a solid concrete structure. So it was very well built, but obviously it was dated as well. So and this was operating mostly as a hotel property. And what we decided was, well, this makes good sense, because if we did choose to leave, there's at least an exit strategy where you can get out, at some point. And,
you seem very much alert to exit strategies.
Yes, that's my big thing. Yeah, because if you can't get out, then that'll ruin you forever. Right? Yeah. So you hear too many things about people getting stuck with stuff, the property and things. So, so this one we took the same approach though. Let's remodel it on our own taste. Let's do it for ourselves. Of course, taking cues of what people liked when they saw our previous remodels and stick with that formula, provided it wasn't like a dated type thing. And then lived in that for a year and decided to sell it. And that was one of the ones that we knew was going to be a tough sell. We expected to hold it for a year, and then it sold within a couple months. Yeah. So relatively speaking, it was.
Not only do you get top dollar, but you sell quickly by having something that's different from everything else that was there on the marketplace, and in each case in prime location.
Mm-hmm. And I think people we saw a lot of renovations happening, especially now the wine market is back pretty much to pre-recession levels. But they're doing off-the-shelf remodeling. They're going to the big box stores to go pick out their cabinets and things like that, where we actually chose to do fully custom, which is more expensive naturally. But the properties that have these big box look and feel to them aren't moving that fast. Yeah. So people just don't want that. They want the uniqueness of it.
You need something that stands out.
Absolutely.
When you go to the realtor, you see 100 properties, and
that one's going to be the one you remember. Absolutely.
Yeah, exactly.
Yeah.
So the reason you sold this time round, because you're moving to Amsterdam to set up a new company there.
Yeah.
And in Amsterdam, you're at least initially renting.
Yeah, because right now, if you any research you do, their year-over-year increase in prices is I think it was 20% from year-over-year in central Amsterdam. So it feels a lot like what Miami was, and what Hawaii was. It feels like there's just no room for it to really, I could be completely wrong because I don't know. The international, obviously it's international, it's different, but I just don't know where. I don't know where the room is to make money anymore on that. So
you're going there obviously to start the business, but alongside that, to have a look at the market, get to know the place, and then decide what you do next.
Right, because the rule of thumb sort of is if you're planning on being there for less than 3 years, don't buy. It's just the
transactional costs are quite substantial.
Exactly, transactional costs are going to eat up any kind of profit you might make. But if your plan is to be there longer than 3 years, then definitely consider buying. So, with the uncomfortable nature of it being the growth that's happened that we saw in the boom of the market, mixed with not sure about specific areas, buildings, things like that, cultural nuances of purchase.
But you also took the opportunity to, as it were, take advantage of the last little bits of the recession, because you have rented a property in a great location right in the central area of Amsterdam, but from a company that really desperately needed to get rid of.
They need to get people in there.
And so you've got yourself a bit of a bargain on the rental front.
Yeah, definitely.
Which can't be bad.
No, so I feel like you get the most out of both, the upside and the downside if you play it right. So.
But is it your intention then to continue on in this property restoration sale market as and when the opportunity presents itself?
If there, and we've looked actually in other markets that had not fully come back around to see is there an opportunity, and I'm personally not seeing it. Like, we looked at Chicago, we looked at Houston, we looked at Dallas. I just don't, actually Palm Springs as well, in Las Vegas, but there just isn't the margin in the room. So I think once, keep the money you've stashed away from the other good deals you made, and then be ready to snatch. And I think what I saw with investors and property owners is that they felt like they're in, and I had some of the same mentality when we're looking at these things, is that we're going to be priced out of this market, so we'll never be able to buy again. But I'm thinking, that. Again, hopefully I'm wrong, because you don't want to see a bunch of people lose their houses, but at this level of acceleration, I don't see how it's sustainable. So you almost have to know that there's going to be a downturn somewhere in a good
market. All
these
markets are cyclical, aren't
they?
Yeah,
absolutely.
Normally, in Europe at least, it tends to be about a 7-year cycle.
Yeah. And if you look at just the past 2 decades, it's been about a 7-year cycle. So I feel like we're kind of in the middle. And our realtor, made a good point in Hawaii. There is a very, theirs is actually 5 to 7 years. It's pretty tight when it's, build, boom, and bust, so.
Yes.
Then I didn't want to be a part of the bust part.
Philip, thank you very much.
Sure.
Good luck in Amsterdam.
Thank you.
Hope you found that useful. If you did, please like us or follow us as usual. Whether you did that or not, we look forward to seeing you again next time. Goodbye.